price of Bitcoin is currently at 90,519, and we've been holding support and things are looking kind of strong here, but there's certain signs in the chart that show that we might be going for lower prices. Let me explain why. Welcome back to FlexCandle, where we read the candles and flex the moves. Right now it's about 4:20 p.m. Eastern time, and the price of Bitcoin is currently at 90,500. And before we get started with the top-down analysis, I want to go over this winning trade on the 15-minute chart. Yesterday I gave you guys a descending triangle with the measured move to about 89k. I gave you guys the trade at around 90k, and we went down to about 91k. So we didn't do the full measured move, but that was still a $1,000 win. So congratulations on whoever took that trade. This is a big win for the FlexCandle community. Now let's head over to the weekly chart. We can see that this candle closes in a day and 3 hours. The stochastics RSI are low. They're starting to point up, so that gives us a chance that maybe we could make a move up, but we're having a problem getting above this 80 moving average, which is currently at 91,900. I feel like if we close below that, the possibility of this bear flag playing out are higher, and this could drop us down to about 65k. So it's imperative that tomorrow we try to close above this 80 moving average at 91,900. Now if we go to the 5-day chart, this candle closes today in about 2 hours and 40 minutes, and the stochastics look good. We could continue going up, but what I'm not liking is that we have a red candle, and if it closes like this could end up being tweezer tops, which will be bearish, and it looks like we have not been able to get above this 100 moving average. So hopefully we could close above here. Let's see what ends up happening. Take a look at the 2-day chart. Stochastics are already toppy. It looks like we're going to roll over. We got the tweezer tops here, kind of green candle, red candle. After that we had a red candle. We're trying to stay above this 21 moving average. This also closes in 2 hours and 40 minutes. We can stay above this 21 moving average. We have a shot to go towards this 50 moving average, but if we start losing the 21 moving average and close candles here, we could end up going further down. Now, on the daily chart, we were on the way down. I'm starting to see some curvature here, so maybe we could start rolling back up here. We're still above the 21 and the 50 moving average, which is good, but we need to stay above this. If we start getting under the 21 moving average, this could mean more downside. So it's imperative again that we stay above these averages. On the 22-hour chart, the stochastics RSI are low, but we could still drag here for a little bit. I'm not liking this. As we go into the lower time frames, this will look more clear, but this kind of looks like a head and shoulder pattern. Left shoulder, head, right shoulder, and this long head here could possibly bring us all the way back down to about 87k. So that's also something to look out for. If we take a look at the 10-hour chart, we can see it looks a little bit more prevalent here, and it looks like a bear flag as well. The only thing that I'm liking is that the stochastics are low enough that maybe we could overcome that and come back up, but we need to get back above this 21, this 200 moving average here. We take a look at the 8-hour chart, same thing. The stochastics are low enough that maybe we can make it up, but we need to get above these averages in order to really make a rise up. Again, this is looking like a head and shoulder pattern. And on the 4-hour chart, see the stochastics never made it above these dotted lines. We're starting to roll over. We lost the 21 moving average, again looking like a head and shoulder pattern. Now yesterday I said that this could have been a possible falling wedge. This move could have taken us back up to about almost 94k. We actually did break out the falling wedge, so this could be considered a winning trade as well. We made it to about 92k. This play was given at around 90k, 90,500. So this is also a $1,500 win. So congratulations on whoever took that, but we did not make the full measured move. It was failed. And now, like I said, this is kind of looking like a head and shoulder pattern that could bring us down. What we need to look out for is once the stochastics RSI get to the bottom of the dotted line, will we still stay above the 200 moving average? If we do, then we have a chance to continue going up. If we don't and we lose the 200 moving average again, then I do expect this to possibly go down to about 87k or even 84k. On the 1-hour chart, the stochastics RSI look like they want to start resetting, but we lost the major moving averages, pretty much all of them here. We would have to get back above this 200 moving average at 91,445 to really show that we're getting some momentum. If we stay below this 200 moving average, again, more downside could come. And on the 15-minute chart, stochastics were on the way down. I'm starting to see some curvature. Looks like we could make it back up here. This could be a possible double bottom, but once again, we are below this 200 moving average. If we could get back above it at 90,759, we might have a chance to make it towards 94k again and see what ends up happening to see if we could finally break it or get rejected again. But for right now, overall guys, I would say we need to hold 90k or worst case scenario 89k. If we lose 89k, start closing candles on the 4-hour chart below 89k, I do feel like we might come back down to retest 87k, 85k, and possibly even 84k. If we could stay above 90k with strength and start closing candles above the 200 moving average on the 4-hour chart, then we could possibly go and test the resistance at 94k again. All right guys, guys, so that's the breakdown. If this gave you clarity or a setup to watch, do me a favor, like, drop a comment, subscribe, and if you have a stock or crypto you want me to go over, drop it in the comment section. This is FlexCandle, where we read the candles and flex the moves. Catch you on the next chart.